Bernie Madoff, convicted of running the largest known Ponzi scheme in history, died Wednesday in federal prison where he was serving a 150-year sentence.
We all have a fascination with crime stories. But have you ever heard of the man behind the largest Ponzi scheme in history, who defrauded thousands of investors and caused billions of dollars in losses? Today, we uncover the story of Bernie Madoff, a once respected financier who became one of the most infamous criminals of our time. Are you ready? Let's dive into this incredible story. Bernie Madoff was a prominent figure in the financial world, known for his successful investment firm, Bernard L. Madoff Investment Securities LLC. He was a former chairman of NASDAQ and a highly respected financier. But beneath this veneer of respectability lay a massive fraud that would eventually become the largest Ponzi scheme in history. Madoff's scheme began in the early 1990s, though some speculate it may have started even earlier. He promised consistently high returns on investments, which attracted a large number of investors, including charities, celebrities, and even financial institutions. Madoff claimed to use a split-strike conversion strategy, but in reality, he was simply using new investors' money to pay returns to existing investors. However, Madoff's story wasn't just about financial fraud. He was also incredibly charismatic and persuasive. People trusted him with their life savings, believing in the image he projected as a successful and ethical businessman. Madoff's ability to gain and maintain this trust was a key factor in the longevity and scale of his scheme. As Madoff's firm continued to attract investments, the scale of the Ponzi scheme grew exponentially. By the early 2000s, he was managing billions of dollars. Despite occasional suspicions and red flags, Madoff's reputation and the apparent stability of his returns kept most investors and regulators at bay. Bernard Lawrence Madoff was born on April 29, 1938, in Queens, New York. He attended Hofstra University and started his career as a lifeguard and sprinkler installer to save money to start his own investment firm. In 1960, with a modest amount of money saved, Madoff founded Bernard L. Madoff Investment Securities LLC. The firm initially started as a penny stock trader but gradually grew in size and reputation. Throughout the 1970s and 1980s, Madoff's firm was a major player in the development of electronic trading platforms and helped establish the NASDAQ stock exchange. Madoff's influence and reputation grew, and he was seen as a pioneer in the financial industry. This solidified his image as a trustworthy and innovative financier, making it easier for him to attract investors for his fraudulent schemes later on. The core of Madoff's operation was a classic Ponzi scheme. He promised high and consistent returns to his investors, often in the range of 10 to 12% annually, regardless of market conditions. This was achieved by using new investors' funds to pay returns to earlier investors, creating the illusion of a profitable and stable investment strategy. The split-strike conversion strategy he claimed to use was nothing more than a facade, as no real trading took place. Madoff's firm produced falsified account statements showing steady growth, which reassured investors and attracted even more funds. He operated a separate office for his fraudulent activities, keeping it hidden from most of his employees and regulators. This secretive operation allowed him to maintain the scheme for decades without detection. Despite the apparent success of Madoff's firm, there were several red flags and suspicions over the years. Financial experts and analysts questioned the consistency of the returns, especially during times of market volatility. In 1999, financial analyst Harry Markopolos alerted the SEC, claiming that Madoff's returns were mathematically impossible and must be fraudulent. However, due to Madoff's impeccable reputation and the complexity of his scheme, these warnings were not thoroughly investigated at the time. The global financial crisis of 2008 put immense pressure on Madoff's Ponzi scheme. As the markets plummeted, many investors sought to withdraw their funds. Madoff was unable to meet these redemption requests, leading to the collapse of the scheme. In December 2008, Madoff confessed to his sons, who then reported him to the authorities. On December 11, 2008, Bernie Madoff was arrested by the FBI and charged with securities fraud. Following his arrest, the full extent of Madoff's fraud was revealed. Approximately $65 billion in paper wealth was wiped out, affecting thousands of investors worldwide. Madoff pleaded guilty to 11 federal felonies, including securities fraud, investment advisor fraud, and money laundering. In June 2009, he was sentenced to 150 years in prison, the maximum sentence allowed. His assets were seized and liquidated to provide some restitution to his victims, though many were left with significant losses. The fallout from Madoff's scheme was devastating. Many investors lost their life savings, and some charities were forced to close. The impact was not just financial but also deeply personal, as many people who had trusted Madoff felt betrayed and devastated by the loss of their hard-earned money. Some victims faced severe financial hardship, while others struggled to rebuild their lives. The scandal also led to widespread calls for regulatory reform and greater oversight of financial markets. The SEC faced significant criticism for its failure to detect the fraud earlier, despite multiple warnings and red flags. This led to changes in the SEC's enforcement and compliance practices, including more rigorous examinations of investment firms and better training for investigators. Bernie Madoff spent the remainder of his life in prison, where he reportedly expressed remorse for his actions. He was housed in the Federal Correctional Institution in Butner, North Carolina. During his time in prison, Madoff gave several interviews, in which he admitted to the magnitude of his crimes and the pain he caused to his victims. He passed away on April 14, 2021, at the age of 82, while still serving his sentence. Bernie Madoff's story is a stark reminder of the potential for deception in the financial world. His rise and fall is a cautionary tale about the dangers of blind trust and the importance of due diligence. Madoff's scheme highlighted the need for more robust regulatory frameworks and the vigilance required to prevent such large-scale frauds. His story continues to be studied in business schools and by financial professionals as a lesson in ethics and the catastrophic impact of greed and dishonesty. Bernie Madoff's story stands as a reminder that crime never pays and that justice will eventually prevail. His rise and fall is a cautionary tale about the dangers of blind trust and the importance of due diligence. We've reached the end of Bernie Madoff's incredible story. This tale illustrates how a respected financier orchestrated the largest Ponzi scheme in history and eventually faced justice. If you enjoy true crime stories like this, don't forget to subscribe to our channel and like our videos. See you in the next video.